What's up guys, my name is Richard and today we're going to be talking about when we should compound our fees. So if you're new to yield farming or if you've been doing it for a while, I think it would be helpful to look at this video because compounding along with rebalancing is one of the more important topics to talk about. And before we dive in here, you can see my current open positions. Currently at a pretty big negative profit and loss in dollar terms, right? Mainly because altcoins have been dropping quite a bit. And you can see my earnings are still beating imperent loss, and I'm projected to make about 40 to 50% APR, which would come out to about like $3,000 to $4,000 a month. Some of these pools are new here, for example, ETH and Bonk and ETH and PetPay, so the APR might not be that accurate. And if you look at all of my positions, including the closed one, you can see I've been beating imperent loss pretty comfortably over the lifetime of yield farming. If you're benchmarking against ETH, currently my open positions, I have about 1.62 ETH profit right now, and my closed position is about 9.7 to 10 ETH profit. So here you can see I've recently closed my Pendle and ETH position with a total net profit of almost 1.1 ETH. So the portfolio is in some pain, like probably most altcoin investors are, but at least I'm getting much more fees than comparing just holding into the market. And the goal with this video is hopefully to help maximize your gains and also talk about de-risking when the time is right. So the first question you probably have is when you should be compounding your fees. If this orange line is my upper and bottom range, for example, if we're looking at ETH and USDC, the green line is my entry. You can see if I entered back here in August, Ethereum and USDC would have been trading above it for quite a while until recently. So the best time to compound is actually below your entry in my experience. And this is only if you expect this pair to recover, right? If you expect Ethereum to recover and perform well against USD, then when you compound below your entry, what happens is that you're gonna be dragging down your entry, right? So when you drag down your entry, what happens is that when Ethereum recovers, right, and is trading above your entry, then you're gonna be in US dollar profit. So a lot of times the goal of these pools, right, Ethereum and US dollar, is to generate cash flow, but also to make US dollar profit. So if that was your goal, then the best time to compound is below that entry. And if we look at this crypto to crypto pool here for MOG and ETH, so I entered this pool at roughly like 0.00028 back here in February. And you can see the price kind of bounce above that a bit and then drop below again, right? And recently I've compounded a lot of my fees back here, and it kind of dragged my entry from like 0.0028 until like 0.002656 right here, right? And the reason why I did that is I want to have smaller cap meme coin exposure, and also I do believe that MOG would outperform ETH again when the risk turns back on. But I could be wrong, and the price could just keep bleeding against ETH, and we're not really gonna know until it kind of plays out, right? You can see here the flowchart I drew roughly last week, right? I was providing liquidity for SOL and ETH. I used some SOL to buy Bitcoin, and then I used my ETH to compound into MOG and ETH. Same thing for other pools here. I use some Pixel and ETH to compound into itself, and then I use ETH to also compound to MOG and ETH. Same thing with the Pendle and ETH. So you could definitely use the fees from other pools to kind of like balance out your pools and basically see which pools you want to have more exposure on. For example, this month I might compound a lot of my fees into SOL and ETH if I think the rate is good. So then the next scenario is stuff like, for example, I was providing liquidity for Pendle and ETH. you can see the orange line again, my lower and upper range. So my entry is on this green line here. I entered roughly in February. You can see oftentimes like you're not gonna time the perfect entry, right? It's gonna dip below, and then sometimes if the token is doing well, then it's gonna like pump above your entry, right? And as long as it's above my entry, then I have more liquidity in terms of ETH than what I started out with in the pool. So not counting the fees. And so when the price is above your entry, you could either compound again, but the risk being that if you compound a lot of it, it's gonna drag up your entry, right? And if this token retraces sharply, then you would have been better off just selling your fees. So a lot of times when it's trading above my entry, it's good to de-risk some of it. You could still compound a little bit, maybe like 25 to 50%. If you believe this pair is gonna go higher, or if you have like a pretty high upper range, like if I extend my upper range here and I'm investing for a longer period of time, then I would probably be more comfortable compounding into this pool, right? And a lot of times it helps to look at your big picture goal. So this is the portfolio tracker that I've made. I'll include the link in the description. But basically it gives me a bird's eye view onto the asset I have, right? Currently I'm pretty heavily allocated to smaller cap altcoins like Pixel. I also have a lot of NFT, right? And unfortunately not enough Bitcoin because I did come from the NFT world. And you can see my goal might be different from yours. If you're already like pretty heavily allocated to Bitcoin, then maybe your goal is to accumulate stuff like Ethereum and Solana and potentially the smaller cap altcoins. So my personal goal right now is to basically stack more Bitcoin and hopefully turn an ETH profit as well on the new pools that I just created. And this bottom part, you could also separate your liquidity pool weight. You can see I'm pretty heavily weighted towards Pepe ETH, Bonk ETH right now, and Pixel ETH. And as long as these smaller cap altcoins are not, underperforming ETH by a big margin, then the risk should be fine. But I am definitely risking more money providing liquidity for these smaller cap tokens, right? Again, like these stuff is not financial advice. This is just what I do. I'm sharing this so that you could, make like different decisions based on your goals, right? And you can see back here in January, the ratio is even more skewed, right? I had, 0.8% Bitcoin. So not nearly enough. And hopefully, I'll be adding more each month compared to, in April. Right now, I have about 1.8%. So getting there slowly, hopefully work up to maybe 35 to 50% or higher. And one thing I probably don't want to do is I can see I'm pretty heavily allocated to ETH and altcoin pairs, is that I don't want to, increase a lot of these risks further, right? For example, I don't really want to sell my ETH and SOL position that's in profit right now into another ETH and altcoin pair. And depending on how the market move here, if Pepe and Bonk is outperforming ETH by a bit, then I'll probably shift this pool into a more safe pool, like for example, ETH and Wrap Bitcoin or ETH and like Coinbase Bitcoin, right? And lastly is how often you should compound. Personally, I find it best that like I compound monthly because a lot of the times my thinking change during the month and price action changes during the month, right? And it takes time to kind of like accumulate these fees, especially if you're on Ethereum mainnet, like stuff like Pixel and ETH or Bonk and Pepe that we just looked at. So I do monthly compounding and I do like to think like big picture instead of, optimizing for like APR in the short term. If I'm overweight a certain pool or if a pool is doing well, right, I might consider taking profit at the end of the month just like how I took profit on Pendle and ETH. You could definitely do weekly depending on how much capital you're working with. Like if you're working with millions of dollars, for example, then like your weekly fees might be quite a lot. And auto compounding might make sense for stuff like USDC, USDT, or ETH, and like some restaking pairs, or wrap stake ETH, if your goal is to accumulate those like stable pairs. And it helps to draw like a simple map like this. You could do this on paper, right? Like I write crypto and stable pools here. I used to have this ETH and USDC pool, and that dropped out of range. So then I rotated to this Sol and ETH pool that's doing quite well. So crypto to crypto, like larger cap, like Sol and Bitcoin, Bitcoin and ETH, right? And then you can list out the small cap token, and then also your HODL bag. When you have a flow chart like this, it makes it easier to manage your positions, and you could decide where to compound your fees, right? So last week I decided to compound more of my fees into this MOG and ETH pool, and this month would probably be different. I could decide to sell most of my fees into Bitcoin, for example. It really depends on when you decide to harvest, what the price is, and what your market outlook is. My personal outlook on the market could be different than yours, right? If you're really bearish right now, then you could be more focused on providing liquidity on pairs like ETH and Sol, or Sol Bitcoin if you're still holding on to crypto, right? But for me personally, I think there might be more downside to go, but I don't mind holding through that volatility and earning fees in the process. Like this other chart, in my opinion, it's already quite beaten up, and we'll have to see how well it holds. The stock market is down quite a lot right now, right? But hopefully it finds the bottom around this 200-week simple moving average here. And to be honest, just because like stuff like Pepe is a meme coin, I don't think it necessarily means that it's gonna be worse to hold through this drawdown, right? If we look at Pepe USD compared to others, you can see, yeah, it dropped from the peak quite a bit, but you can see it's been like stabilizing in this accumulation range for quite a while. And my plan with this pool is hopefully it continues to accumulate here for like a leg up when the risk on market returns. You can see some sign that the momentum is shifting, like there's a bullish divergence here. And the 20-day EMA is kind of crossing over the 50-day SMA. And if you compare stuff like Pepe with stuff like Aerodrome that I invested in, Aerodrome is a pretty solid project, but you can see just because it's like a utility project doesn't mean that it's gonna like, outperform Pepe, right? Since like February until now, Pepe has been pretty much outperforming Aerodrome, even though the market condition is really bad for meme coins. And my thesis behind Bonk is that Bonk is more than just a meme coin, and it's pretty much one of the largest coin on Solana. And when Solana is doing well, Bonk is probably going to do well as well. You can see here recently they acquired the Exchange Art platform, which is like an art marketplace on Solana. And you can see there's like BonkBot, the Telegram trading bot on Solana, and a bunch of other apps. So they're definitely more like a project rather than like a meme coin. So kind of like both. And as long as the altcoin market recovers here, these pairs should do decently well. So that's pretty much it for this video, guys. I hope you got something useful out of it. Be sure to check out my other videos. Hopefully it helps you make more money while limiting some of your risks in the process. Thanks for watching. I'll catch you guys next time.